Hello there, Tommy Sandvik here with the Bull and BearIT Traders, and I have a question for you today. Have you ever been trading and gotten so frustrated because maybe your analysis was right, but your timing was wrong? So you said, oh, it's going to drop. You take the trade, you lose the next bar, boom, it drops. Today, what I'm going to show you is how you can use the zones that we identified in the last video to take profitable trades and stack the success chances in your favor regarding timing as well. So let's get it going. Okay, so as you recall in the last video, first of all, I forgot to say, don't forget to subscribe to the channel, and our website will be launching after January 1st, so make sure to sign up for our pre-launch list so you get updated on all the amazing things we have going on. There's also a link to our current Facebook group, so you can click that link and come on into the group and see what it is that we have to offer. And there will be more information on that coming in the near future. So as you recall in the last video, we identified zones. And what we said was we're looking at the 4-hour time frame and we're drawing the areas where price is attracted to and identifying that we only want to trade, I personally only want to trade where those zones are. I have no interest in trading anything in between those zones. So now the question is, how do you take that information once you've learned how to draw the zones? How can you take that information and make and increase your probabilities and get your higher in the money rates and hopefully not have to have nearly as much screen time, chart time in your tradings? So the rules effectively, if you're going to sort of identify rules, okay, step one is prices getting close to your zone. So when that happens, then you do have to kind of pay attention. Now, if you've got a zone where it's reaching the zone for the first time, so let's say if we're looking at this chart, we may have drawn something historically, but here we have a first-time zone entry. The first time it enters a zone is critical because you want to see how price reacts. So if we take a look at the euro dollar here, so trying to put this into steps. Step one is it's actually best if you have some indication if this zone has recently been tested, within the last, let's say, week or two. Just going back on this chart, okay, we're looking at the 3rd of December. That's 2 weeks ago. So where we got into this sort of range that the euro dollar is in, for instance. So you see that we tested the first zone, the top of the zone, on the 9th, again on the 11th, again on the 14th, and again on the 15th before dropping down. On the lower zone, we tested on the 7th, the 17th, a couple times on the 17th, and on the 18th, 2 times so far on the 18th today. So that's the first thing, is that it's going to be most beneficial if there's been at least a touch recently so you can see how price reacted. Now again, we're looking at 4-hour. This is very high level. We can't trade 4-hour, well, at least I can't on my broker. I cannot trade a 4-hour bar. All I can do is trade within a 1-hour window, right? So here's the recommendation. First of all, when you're first getting started, okay, don't even consider a trade until 2.5 hours into the current 4-hour bar. At 2.5 hours, you start looking at the chart and you start getting an idea of where your potential trades might be. And the reason is that when you look at these zones, price will go into the zones. Price will even go to the top or the bottom, the far extension of the zones before rejecting. But if you took a trade right at the entrance of the zone, um, it may be that the next candle goes completely against you to the far end of the zone before ultimately coming back. Now you can accept that, sure, but you're going to be, if you're wanting to learn and really be accurate when you first start doing this, because I know a lot of you are in very beginner stages of just sort of reading price action. So if you want to make it absolutely highest probability, what you're looking for is at 2.5 hours into the current 4-hour bar, you start looking at what your potential trades might be. The significance of these zones is the fact that they're closing the 4-hour bar. Okay, what matters is, where is the 4-hour bar closing? That's very, very, very important to understand. What makes these zones powerful is that price is going into them, rejecting back, and closing outside of the zone. That's important. That's why you want to take a trade based on the close of the 4-hour bar. So what that means is 2.5 hours into the 4-hour bar, you're looking for potential setups. You execute the trade within the last hour of the 4-hour bar, depending on your targeted strike rate when price enters the strike rate. So in a perfect situation, at hour 3, price is within the zone, and you will be able to take the trade in hold on one second. Okay. You will be able to take the trade within the last hour when price is within the zone, is in the zone. You want to take the trade assuming it will go out of the zone as a rejection, not as a continuation. So, for instance, if price was here, let's get rid of some lines here and make this a little cleaner, right? Okay, so, if it's the 3rd hour of the 4-hour bar and price is, let's say, here, take the trade, a put. Likewise, if it's in the last hour of the 4-hour bar and price is down in the lower zone, where I have all these lines because that's where it's been playing, take the trade. Take the trade for end of hour. The reason is that's the end of the 4-hour bar. Now, how can you tell where the 4-hour bars are? Easy. On this broker, the time is currently 17:34. If you just simply roll over if you want to, you can eyeball it on the 4-hour. It's pretty easy to do, but if you want to be precise, put your vertical line, and you see the last bar started at 1600. So I know that when and it's currently 1734 on this broker. So that means that this 4-hour bar will close at 2000. Okay, so very simple. So now let's look at the hourly chart, because I've been waiting to make this video so that I can actually show you examples of what has happened. So obviously at this point I have them pretty well thought out. So here's a perfect example. Okay, sorry about, again, all the lines, all right? So your zone is where I drew where I've got the blue there, just based on past price action. But what you can look for, you see this bar right here, okay? At the start of this bar, at 1900 yesterday, price was in the zone. So what did I do? 1-hour call. Simple. Just like that, 1-hour call. And out of the zone. Because the 4-hour bar was going to close The 4-hour bar is not going to close in the zone. The probability is higher. The 4-hour bar is not going to close in the zone. It came back to the zone, 20 to 21, 21 to 22. Okay, now 22 to 23, you've got the potential here. Well, it could go down and take out the zone, or it could have rejected. So as you get more comfortable with the method, maybe you end up taking this call, which I believe I did yesterday. Maybe you end up taking this call. But maybe you don't. That's okay. No trade is better than a bad trade. So if you want to be super controlled about it, then only take it in that last hour. But what you'll start to see, and this is why we took the trade, is look at the line that formed. So within the zone, there are still points where price will reject off of even within the zone. Here, it clearly established down at this line about 024, 1.08024. It didn't break, didn't break, didn't break, and then it shut off. So that becomes a very strong line you can take your trades off of. But you're able to determine that line because you've seen how price is reacting within the zone. But so you can use the two sort of together and come up with that. Now another thing to take a look at always is, again, the importance is where has the 4-hour bar closed and where has it touched. So if I was looking just based on the past, I actually would have put my strike rate right there. I would have said 0.0844, 1.08044 as my strike rate based on the past. If you go through, then I would have had the opportunity to take this trade here. I mean, here it was at the end of the hour, right? It closed down there, so that probably wouldn't have worked anyway because it would have been the end of the hourly candle, which I would not take. The rule about the last 15 minutes still largely applies. So I would not take a trade that's going that direction within the last 15 minutes of the hour. That would be a bad idea. Never mind what the 4-hour is. I just wouldn't, because it's going in that direction, and it hasn't yet established where that line is, because that was the first touch since all the way back. Since all the way back previously to here, right? That was the first time since, that it had gone back in. So you definitely want to take a look at that. Okay, so that's it. I mean, the last hour of the 4-hour bar is your target when you get started. Don't trade in the middle of the zones. Don't trade I'm not interested in a trade right now. It's way beyond the zone. Just do that on the charts. Now let's take a look. You say, well, yeah, but Tommy, it could break. Absolutely, it could. The zone is an area where there's a lot of orders built up, right? So what type of activity can push price through all those orders? Well, one is, every time it comes back to touch, it is taking orders out, potentially. But there's also more orders being placed. So in this case where you've got these rejection up, it comes back, it tests, it rejects up, but it is getting weaker because the rejection even recently has been breaking down. But nonetheless, you say, well, what can make it break? Well, repeated going through, but typically, if you're going to get a true break, and a true break means this: the 4-hour bar has to close beyond the zone. So if we flip to the 4-hour, okay, in order for me to consider this zone to be broken, you have to have price close down below the bottom of the blue here, okay? Number one. So when is that likely to happen? Well, I would say within the first 2 hours of a 4-hour bar, based on what I've been observing, or during news, price can definitely push through these zones. But again, will they close there? That's the key. It has to be a high volatility time. The chances of a zone like these breaking, truly breaking on the 4-hour chart um, in the afternoon of the U.S. session, in the Asian session, are both of those is very low. So the biggest time I see zones break has been London and London US overlap. And I will show you an example. So we're going to flip over to Euro Yen. We traded this yesterday. I had this zone drawn. And it came back, it tested, we took a couple trades, and then it looks like today in the 4 to 8 a.m. bar, that's according to my broker time, which I think is actually aligned more or less with the UK. So yeah, basically morning session of London, whoop, down it went. Could have been news driven, but nonetheless, it broke during that session. So, and actually it was a crazy candle. This must have been news because it went all the way up and then rejected all the way back down. It took out this zone that it's been bouncing off of. And yes, it closed on the 4-hour below the zone. So it is on the other side. Now, what that doesn't mean, it doesn't mean I delete the zone though. Well, actually, first let's take a look at exactly when this broke. So this bar was at 5 o'clock. This bar was at 6 o'clock. This bar 7 to 8. So it was the last bar, actually, of the, it looks like at the beginning it was at the top of the zone, and then it dropped in the last bar. So it's not foolproof. All the rules I gave you, I feel like, just went out the window. But again, typically speaking, you're going to be, you probably would have been a little bit freaked out anyway because the price did go beyond the zone and then retraced. So that's a good indication that it's testing. So you keep that in mind. It's actually interesting. There was no news this morning. I just checked on Forex Factory. So, whatever, it broke. Now, here's the thing, though. This doesn't invalidate the zone. Yeah, the zone broke, but now the zone will act as effectively resistance. So again, these concepts are very much like support and resistance, except that you're drawing this information off of massive changes in direction based on a 4-hour chart. Because when you flip this out to 4-hour, I mean, it had been tap, tap, tap. It's not, see how it's not rejecting nearly as much. There's not, I mean, here, right here, it rejects, whoop, 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 up, 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 almost touches, doesn't quite, up again, up, down, 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 now it touches. Okay, that's the kind of rejection pattern you want to see. When it's touching, 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 that closed really close too. Here, again, doesn't come back up. This one jumps way up and then back through. I mean, that's not what you want to see. You want to see it make progress away from the zone. I mean, that's really what you're looking for, okay? So keep that in mind. Now, that said, when this candle breaks the zone's taken out, that's fine, because look what happens on the next one. It turns around and retests it and then rejects it. That's okay. This is still a valid zone. I'm going to keep this on my chart, absolutely. The only thing that will invalidate the zone, to me, is if price closes within the zone. If on the 4-hour chart. So if the 4-hour bar comes back up and closes between these two lines, but inside that blue zone, then zone's invalid. I don't want price playing around in that zone. I want it to be wicks and massive rejection away from the zone, massive movement away from the zone. So that really covers the zone strategy. There's other things you can utilize. You can go with this. No, I don't use any indicators. I've been asked about that. I don't use indicators. What do I need an indicator for? I mean, what is an indicator possibly going to tell me that price isn't telling me as it is? Now, if you're looking for confirmations, then there may be something out there. I'm trying to work on that. because I think if you have a push into a zone, there may be an indicator out there that could help. It's just to give you a few more trade opportunities, because I realize I'm effectively, in a 24-hour period, we're going to have 6 4-hour bars. So that's effectively 6 true, wonderful trading opportunities. However, there's oftentimes more than that, because once the zone is touched, you start to get a few taps. So you definitely get a few good opportunities. Just make sure that you're being very careful and mindful about where your 4-hour bar is. If it's new into a new 4-hour bar, I typically stay out. I want to wait at least 2 hours in before I would take a trade at all with this. So that should definitely help. And again, lower volatility times, you have a much greater chances of a bounce than you do of it breaking. So I hope that is helpful. That's really the majority of what I have to give. If you have questions, definitely let me know, and hopefully you can use this as a base, learn it off the 4-hour and just the very short time window, and then you'll be able to take additional trades as you get more familiar with watching price action within these zones. You're going to start to learn this. I mean, I've literally learned all of this within the last 2 weeks. So I should also just give props. I haven't learned this on my own. Okay, I've been studying with a trader who's teaching Forex and teaching these zones. I took the information and tried to get it into binary options and make it in a way that's teachable and duplicatable for you guys, for everyone else to be able to trade with a high degree of probability. Now, if you want to add, but once you get this down, the cool thing, and I had my my entry way too low, but on Forex, you can set a pending order. So if I would have set a pending order down at this level where it kept touching, I could have easily gotten, let's see, 08685, 044. I could have collected like 50 pips off of that if I got out at the right time. So there's definitely opportunity there to stack your success with different types of trading, Forex, Nadex, and binary options offshore, using these concepts. And that's really what excites me the most about it, is that capability. So yesterday was a great day, actually. And you see, like, for instance, we went up on dollar CAD. I didn't take the trade. I should have. It touched yesterday. It touched again today. So really great opportunities there. I woke up yesterday morning and pound dollar was in the range on the 4-hour. This zone, by the way, is now invalidated because it did close within the zone. But anyway, yesterday I woke up, got a nice trade out of this zone. And let's see. We traded Euro Swissy yesterday as well, or maybe that was 2 days ago. There was a good opportunity on EG. Oh, hey, another opportunity. Actually, literally, as I'm recording this, there's an opportunity on this pair. So yeah, really, really great opportunities. And if you just wait with price, and I'm kind of going on here, but it might feel initially like, oh my God, this is going to take forever for a trade to set up. But once price gets to these levels and starts, touching them, and you see it happen, your opportunities become large all at once. So it is a bit of a waiting game, but then when it comes, it's like a gold rush. So I had 2 very, very good days last couple days. Okay, that's all I've got. Subscribe, sign up, join Facebook, and I will be doing more in depth with this as part of our website, BearITTraders.com. Thanks so much.